No. Hi everyone, my name's Amy Rose. I'm the Managing Director at the Digital Economy Council of Australia. We're halfway through the the Digital Asset Regulatory Summit, which is going right across the globe today. We've got another 3 hours or 4 hours to go. Right smack in the middle, we're going to be covering the Australian digital asset regulatory landscape. Now, in here, we're going to cover a few different topics over the next 2 hours. So it'll be first this session led by Carolyn Bowler, the CEO of B2C Markets, will be leading a conversation that is really quite widely birthed so that we can just get that general gauge of what's happening here with regulation. And then we're going to go into taxation, custody, and consumer protection. So some pretty big topics that are usually on the tip of everyone's tongue when we're talking about regulation here in Australia. So I'm going to welcome Caroline Bowler to the stage, Paul Derham and Michele Levine, who are going to have that conversation. Legal minds, they'll give you a briefing as to what is legal advice and what isn't, probably more along the lines of the latter. So without further ado, I will bring them to the stage. Here we go. Stage is all yours.
Hey, that's fantastic. Thank you, Amy Rose. And hello and good afternoon to everybody. How exciting. I want to open the session, first of all, by saying anything that we say here is neither legal nor financial advice. I just want to make sure that disclaimer is reaffirmed for fear we stumble into any grey area. Although with two lawyers on this conversation, I am sure that I will be pulled up as soon as I say anything too controversial. So it's been a great first half of the day, kind of providing a really global perspective on the digital economy. And now we get to go deep dive into the Australian scene. And our task is to do some groundwork and kind of explain where we are in Australia at the moment. And most importantly, we were asked to talk about what we feel has got the greatest significance for the Australian digital economy and where things are going. So it's fantastic to be joined by Paul and Michele on this call, because I know that they are just absolutely neck deep in expertise in this, both respectively and kind of collectively their contributions to the digital economy conversation here in Australia. So without much further ado, I would like to get into the first part, which is where are we now with digital asset regulation in Australia? From my experience sitting with my CEO B2C Markets cap on, and I've been in this hot seat now for 4.5 years, and it feels as though the industry has been kind of shouting up and jumping up and down over the course of this 4.5 years to get some clarity around the regulatory framework in Australia on this topic. We've seen, well, we're now in our second government, so we've had two successive governments kind of try to grapple with this topic. We don't seem to be much further along in terms of consultations and so forth. And from what I understand, it looks as though it's going to be the next government cycle before we're going to see any regulation here in Australia. Meanwhile, with all of that kind of, I suppose, relative insecurity happening, we've also got ASIC, our local regulator, starting to take some actions against members of the industry. So we're going in from the top, we're going in with the meaty stuff. Paul, I'd like to start with you. First of all, do you feel as though that's a fair characterization of where things are in Australia? And secondly, then, can you share any light on what's happened on the back of some of those court cases? Because I know there's been some high profile ones with Coin and Block Earner, amongst others. So it's a bit of a double pronged question. If I can throw you under the bush first.
Sure. Thanks, Caroline. And I guess the first point that can be made just by people watching, looking at the screen, is you can see Caroline there, and you're running a successful, growing business in this current environment. So that's the first point to be made. And there are plenty of other businesses doing that as well. And Michele's firm and my firm are both helping businesses do that. And the law is as it currently is. And I can see the participants to this webinar, whether they're trying to double screen and do some emails at the same time or not, I'm not sure. But I can see Reese from ASIC and is here, and others are here watching. And so the law is clear enough for a lot of digital asset businesses to know what they can and can't do. We get inquiries regularly. We have supplier agreements or different sort of arrangements with offshore technology businesses, and they refer, for example, tokenization of real world asset business opportunities to us. And once we explain to them that they have to get PI insurance, do it through a registered managed investment scheme, maybe get a banking relationship as well, although the third party our responsible entity might do that, they kind of go away a bit unmotivated, to be honest. And so there are parts of the ecosystem that are not able to do business in Australia under the current law. So anyway, we've had some cases. Many people will know that our firm represented Finder in a case that ASIC lost, and it was found that the product was not a financial product. ASIC said it was a debenture. ASIC have appealed that, and last week that was the appeal was heard before 3 federal court judges. So we'll see where that goes. Everyone wants a decision from a judgment to bring clarity, but what happens is actually the judge will clarify what they think, how they think the law, the judges in this case will clarify how they think the laws should apply to that set of facts. And so that will give some clarity for that situation, but then it often raises a whole lot of new complexities, actually. So we had a judgment in the federal court come out in a different case a few days ago in connection with Kraken, the BitTrade case, and that was an attempt to clarify the law. And sure, the judge said the fiat component of that margin lending type arrangement is actually a debt, and therefore the design and distribution regime applies. You need a target market. But then it's almost like the judgment also suggests that businesses could offer some sorts of lending that is crypto to crypto lending that wouldn't be within the regulatory perimeter. So I don't know if that's helpful to ASIC. ASIC certainly is entitled to use its powers to clarify the law, to regulate, to have efficient markets. It has a statutory mandate to do that. So anyway, we've got the law as it is, and then we've got court cases which are sort of clarifying but sort of confusing the situation.
I think that to your point about trying to get some clarity, we're kind of one step forward, 2 steps back in some of these cases, and certainly for me, then the hat that I wear, as I say, the one thing I want is some kind of clarity to make sure that we're not inadvertently going down the wrong path. But also, we want to build a robust business, and I can understand for those that are coming in from overseas as well, trying to explore what they can do in this market. That clarity is just so important. Michele, do you have anything to add on that, or what's your view?
I think I've probably got 3 points to make. Paul, by the way, I agree with everything that you said. So anything I'm saying here is just in addition, as opposed to in disagreement.
It's fine if you want to bring some controversy.
I'm sure we have things
right.
I'm sure we do have things to disagree on, and we can talk about it today if we want to. I think the main challenge is the regulatory perimeter is really unclear. I think it all comes back down to what is a financial product, and this is driving, I think, a lot of the case law and a lot of the enforcement activity at the moment. And on the other side, around the design piece, and there have been opportunities for. And Paul, you're actually sort of picking this up with your comment around crypto to crypto margin lending type products, arbitrage opportunities. And I think without really detailed and helpful guidance around what is the regulatory perimeter around a financial product, it's really challenging to get that clarity, Carolyn, that you're sort of talking to here. It is not easy to provide that regulatory clarity. I definitely don't. I'm happy I'm not ASIC and I don't have to do it myself. Like I don't envy them. It's not an enviable task, but I do think it's a really, really critical and important task. And I'm really excited to see the steps being taken by ASIC with updates info 225 being flagged and how that's going to play out, and sort of the ring fencing that the industry might benefit from as a result of that. The other challenge is when you don't have sort of clear guidance and clear parameters, people will often go and get legal advice as to, am I on this side of the fence or am I on the other side of the fence? What does that actually mean? You would know, Carolyn, different lawyers have different opinions, and different lawyers take like different bullish or non-bullish views on things. That's not necessarily helpful either. And I think, and I'm going to say this, and Paul, you can agree, not all lawyers are equal in this space. And so there are definitely people who have really deep, rich experience and can draw on traditional finance and understanding of the technology. And there's others who might not have as robust a background, and that can result in really different legal advice and legal outcomes. So I think that's an important point to make as well. And then you add on top of that regulatory enforcement action and the way that these matters come to court. And that is challenging because often we're finding in these cases, we've got an agreed set of facts. And those agreed set of facts, as Paul talked about, really determine the way in which the case is considered, the submissions made, and ultimately the reasoning and the judgment outcome. And they can be very helpful or they can be unhelpful, particularly if they're on esoteric points in terms of the application of regulation, and also if esoteric arguments are raised. And I think Kraken's a really good example of that, Paul. I think that's a really good example that you sort of pulled out. And I think building sort of a legal database on how things apply from law, like law enforcement and like judgment and cases, is actually somewhat fraught. I think you often get the outcome that you don't want it. And we've certainly seen that with Coin. Coin went in there to talk about non-cash payment facilities, and now we've got bigger issues around corporate authorized representatives and intermediary authorizations that have far broader implications and ramifications for the entire financial service industry at large. So you sort of don't know what you're going to get, A, because you don't know the submissions that are going to be raised by other parties. B, you don't know how the judges perceive those submissions and the way that they view them and where they see the issues lies. And then often the judgments will be very fact specific. There might be a little bit of obiter and a little bit of discussion that talks about points at large. But I've been very hungry for more, Paul, in all these cases. I don't think the courts have really gone out on a limb and provide sort of more obiter and sort of more far-reaching comments around some really critical points for industry. So that's sort of my sort of take on it. Well, I don't know if you want to have a chance to add or disagree.
I agree. And for those of you watching before, when Carolyn and Michelle and I were preparing for this, Michelle mentioned that she has a bit of a table referencing all these cases and the takeouts, and I actually have one too on my desk. and I'm sure our firms have a similar framework where when we do terms and conditions for an exchange, for example, when we add a single feature, we have to benchmark it against the half a dozen Australian cases and maybe look elsewhere as well. So that's the level of lawyering that's required at the moment. Maybe that won't change with clarity from the government when those reforms come through, but maybe hopefully it will get a bit clearer. So that's sort of the environment we're in, right, Carolyn?
Yeah, and I think that mirrors very much my experiences, the professional experiences of you trying to do the right thing and just want to make sure that you're doing the right thing. But again, those specific and very, I don't want to say niche, but they can be quite niche, and how that impacts and then the ripple effect, to the rest of the industry when it comes to products and services that you'd be looking to offer, which kind of segues in nicely into the existing regime as it currently stands. Obviously, where B2C Markets is a holder of an authorized representation of an AFSL under B2CM payments. And with that, the whole point for us with that is about exploring, well, what are the opportunities that are available to us as a crypto business under the existing financial services license? So we're not going to try to throw the baby out with the bathwater. Let's work within the frameworks that exist. And I suppose the question then for both of you is, let's talk about, well, what innovation is possible for businesses? Or do you have any thoughts around what innovation is possible for businesses under existing qualifications? Thinking primarily about the the Managed Investment Scheme, or the non-cash payment, or any other the variety or flavour therein. Paul, Michelle, who would like to go first on that little one?
I can kick off, Paul, and then you can, if you want to add. I think there are opportunities to take advantage of existing sort of regulated product structures. MIS is Managed Investment Schemes one, often non-cash payment facilities another. There's also certain derivatives products as well that you can take advantage of. The challenge that we've seen, Paul, and I'd be interested in your thoughts as well, is when you're going for licensing authorizations for these products, and as soon as you put the word digital asset or crypto or blockchain in it, the licensing process becomes extremely challenging. It definitely is longer. It definitely has more requisitions. It definitely gets narrowed to I think the lowest bare bones in terms of the authorizations required. And so that process of it, in terms of I guess, opting into regulation and designing products to be financial products today, it can be done. It just takes longer. There's, I think, a fair bit of upskilling and uplearning when it comes to the licensing process in terms of engagement with ASIC. I think we're probably better than where we were 2-3 years ago, but I still think that process is happening, particularly as we get more, I guess, we're getting different products, we're getting more professional products come out with, like, I guess, different products and features that might not be as like stock standard and straightforward. So that's definitely what we're seeing. I think the other challenge is things that Paul mentioned before, is when you're in a regulated environment, you need to have certain infrastructure associated with it. So not only do you have to have your own internal risk and compliance infrastructure and frameworks, which can be built, but you need to have you need to be able to have PI insurance. Now, PI insurance for the financial services market at large is challenging. Fintechs is challenging. Digital assets is almost impossible. Most people who've obtained cover have gone direct to some Lloyd syndicate offshore. The coverage is very limited. It definitely has a cyber exclusion, which is really not helpful when you're looking at like a digital assets business. So we've got the issues around securing PI. There are some alternatives that are available through ASIC when you can seek relief, but our experience to date has been ASIC has been less likely to give relief for like self-insurance type arrangements or alternative PI arrangements. So there's a real challenge there that industry and the regulators I think need to work with from a PI point of view. And then when you are a financial services licensee and you're issuing financial service products, you need to have client money account, you need to have a bank account with an ADI. Now, I'm sure you can talk to your experience around debanking. I think every crypto business has been debanked at least 5 times. Maintaining appropriate, strong banking relationships has been extremely challenging. I think a lot of it's come around with the synonymity around scams. It's been, and what is perceived higher AML/CTF risks, even though you guys are equally regulated by AML/CTF rules, and you have to follow the same processes, procedures, practices as your bank counterparts. And so I think they're 2 really challenging things. Then if you want to operate in a managed and scheme environment and you don't have the appropriate responsible entity license authorizations because you're going to act as the manager as opposed to the trustee RE, finding an RE that's prepared to go on risk for you for that is also extremely challenging. Our experience with a lot of the REs in this space is there's not much appetite. They are really a volume play when it comes to products and services, and they really look to de-risk their portfolio more than add risk to their portfolio in terms of the type of business that they take. So there are structural challenges with operating in a regulated system. And that's not to say it can't be navigated and done, but it's certainly not easy, and it definitely requires, you know, a lot of stubbornness and a lot of like investment in terms of reaching the outcome you want. And like someone like Monochrome, who's actually gone through that process, I think they could probably talk to you that in terms of the ETF process and eventually deciding to go on SIBO as opposed to ASX because of some of those challenges. Paul, I'll kick over to you because you probably want to pick up some additional things as well.
Look, I guess, Carolyn, you're saying what can be done. And yeah, we've got managed investment scheme opportunities, which, Michele, you've just highlighted all the challenges. You've also got the non-cash payments. So that's your payments infrastructure. And then you've got, let's talk about derivatives. I think there are a few things that can be done that I haven't seen yet. And I don't know why they're not being done. But in terms of your license, Carolyn, you just mentioned non-cash payments. So people with that license can link to card schemes. So MasterCard, Visa. You could have authorized representatives with branded cards that have certain features on those cards, and there's a whole industry that does that in payments. Non-cash payments can also let you do certain things with your wallet, and I think ASIC is going to clarify its view on what needs a non-cash payments license. Michele and I were talking with you, Carolyn, preparing for this about the number of exemptions, about why most exchanges, in fact, maybe even all exchanges, I don't know for sure, even if they've got NCP licenses, I doubt they would be using that NCP license for core parts of their crypto wallets. And so I'm curious to see how ASIC is going to give guidance on its current thinking on that, because it's entitled to change its thinking and evolve. We're all needing to evolve our thinking on certain things. So there's a lot of opportunity there in the NCP. Something I haven't seen in the derivative space. I was at the Finance Magnates Conference on a panel talking about this. I think Reece was there as well earlier this week in Sydney. And you've got all these CFDs providers wanting to offer more leverage, wanting to do all these different things. But you could, if you had one of those licenses, offer an unleveraged derivative that is really a synthetic representation of any crypto asset or token that exists in this world, as long as it's not, a scam asset. And you could offer that on an over-the-counter arrangement if you had that kind of derivatives license. And that's probably, in our experience, we got one this year. It takes us about 2 years to get one of those licenses, so they're nightmarish to get. Interestingly, Michele, I wonder if ASIC's changing its approach with non-cash payments licenses for crypto exchanges. We did get one recently for someone in 5 weeks, a crypto exchange, and then they had to pause it because the PI insurance was so expensive. So the barrier that you pointed out is what was the barrier. So I wonder if ASIC's like, let's push along these non-cash payments because we want to encourage it more. I'm not sure. Yeah.
I think, and I don't know your experience about like the licensing process. I think it depends on the analyst. I think it depends on the workload, and I think it can be, you can have very different experiences with those things. I think when it comes to licensing, generally non-cash payment facilities, provided it's like a wallet type payment, traditional payment functionality, they're less complex and they should be easier to generally get across the line, because there's not that much depth in terms of how the product works. So that makes sense to me. I definitely agree around the PI piece. I think we need to think about, from an industry point of view, what can be alternate ways that we can provide consumers with appropriate protection, and maybe we need to start looking as an industry at alternative risk products, and sort of looking for a solution holistically as opposed to on the licensee by licensee basis.
Interesting.
So like aggregate deductible funds, alternate risk products, they might be solutions that we might need to think about. I know when AFSLs just came in, there was the bond, the bond instead of PI cover that you could use, and I suspect, I would hope to see options like that once DAF reforms come in as well. And so maybe when we're looking at certain licenses where PIs, there's just no capacity out there, looking at like stock standard exemptions that you can slot under rather than having to go under on a case-by-case basis, because it would speed up the licensing process. I think there's a real opportunity there. I think with the derivative and the OTC, once you're doing anything in retail with that product intervention order around CFDs, it's like 50% margin you have to, I think, hold once you meet the definition of the CFD. And a lot of the people who are looking at accessing these products, they don't want the 50% margin. Paul, is my experience. They want to
why don't they offer a one-to-one? That's what I'm saying. Why don't they offer a one-to-one?
Oh, you could do that.
No one's done that, I think, because you get all your money in your leverage, right? The broker makes all of their money in the loan component of it.
I think also though the whole, a lot of the rationale around those products is taking advantage of actual market swings, and that's where like the sort of the leveraging and the gearing sort of gives you that. I mean, it means that once you do that, the losses are also compounded, but the gains are actually in aggregate. So there's like, I guess, swings and roundabouts there, but yes, it's completely doable. Challenges, they can be navigated, takes time, and takes, I guess, experts who can help you sort of work through those processes.
Carolyn, just something that Michele said in terms of us trying to find solutions. I like that line of logic and thinking. I don't know if you're willing to shed any light on how much PI costs at a sort of thematic level, but we have obtained alternative arrangements with ASIC for a large business that was listed that didn't want to pay for PI insurance because it was too expensive, and we got permission to do it, but we basically had to sit that amount of money somewhere in a captive and then have terms, and we designed it with ASIC, and they accepted the application. But then next year we had to convince ASIC that they can't get PI insurance on the market to keep it going. So it's really complicated. One way that ASIC could help is be a little bit more flexible in approving alternative arrangements for PI. But I don't know, Carolyn, if you're happy to talk about just broadly about PI.
So for us, it's like that. We've been very, very fortunate that we found a decent broker to work through who went the extra mile to try and help us get PI cover. We've managed to get it. We've had it for a couple of years. It is bloody expensive. I'll give you that much. We looked at the alternative arrangements that you were talking about, Paul, and it ended up, I think, in the end, making more financial sense for us to go with PI than it did. Now, to be fair as well, our PI coverage has the cost rather has decreased, the premium has decreased, which is great. I think it went in high and it's come down a bit, which is helpful. And I think we're seeing a little bit more competition come in on PI where people are more willing to look at digital asset rather than crypto. Digital asset businesses, particularly those that are doing it under a financial license type situation, but involves, as you mentioned, like a lot of transparency, a lot of legwork. And it's quite amusing when you talk to people in other industries, and PI just isn't an issue for them. Bank accounts just isn't an issue for them. And you're trying to explain the kind of how this whole industry is trying to do the right thing, but it's tottering on a kind of a knife edge in some of these instances. So I think we're all looking forward to when things get more stabilized with what is to come in the coming years. Just on the point about the bond, I know that there was conversations within the industry a couple of years ago around that kind of thing. And I think if we could find perhaps a common ground, that would be great. I suppose the issue being for a lot of us, it's like, well, what risks are we all respectively exposing each other to? And then how would that all work? And what transparency then would be required?
Or bank guarantee could equally work like PI cover as well. I mean, they're not necessarily easy to obtain because of the relationships that a lot of crypto businesses have with banks. But I think we need to look at thematic alternative arrangements. And I think, Paul, when you've got an alternative risk arrangement, like a self-insurance arrangement like your client has, maybe it's reviewed every 3 years.
Yeah,
annually
totally.
seems somewhat cumbersome. And I mean, we had a client who wanted to actually was so big that they actually couldn't source PI cover sufficiently enough for them because of their size. They couldn't actually source PI cover. Like, no one's prepared to take the risk. They couldn't even spread the risk over a number of insurers. So the only alternative was for them to self-insure, and we just couldn't actually get it up for them. So it is particularly an issue for digital assets, but I think it's a broad issue around just coverage in terms of financial service licensing. Just generally, there isn't the biggest capacity out there. A lot of the insurers, either, as I said, mentioned Lloyd's, we're seeing a lot of them come out of the Caymans, and you've also got to look at, I guess, the ratings of those insurers as well in terms of what is the healthiness of those insurers. Are you actually better to self-insure than be with an insurer who might not have the same regulatory framework as we do here, or the UK, or someone else? So I think there's a lot of broader considerations.
Just conscious of time, I just want to quickly go through then what we've spoken about. That with the overseas coming in, they're looking at sometimes the lack of clarity makes them perhaps less motivated to move into or be able to do business here as a result of that lack of clarity or the hurdles that there are. That the court cases are creating a certain degree of clarity on specific aspects, but as you say, sometimes the arguments can be rather esoteric and therefore rather niche, which doesn't really help the industry then as a whole, and also introduces new complexities into the conversation here. That there is a lack of clarity around the regulatory perimeter, around what is a financial product, and also around the design of these financial products, and that we're looking forward to getting that detailed and helpful guidance from ASIC, which I'm sure is on the way on 225. One of the things, just quickly then before we move on, is future state preparation for licensing. What should I do, lawyers? What should I do as the CEO of Recruiting?
Clean hands
I'm
is
here
always
for the free legal advice.
clean hands is always a nice way to go with a license, right? So,
yeah, right.
So you want to. So, Paul, maybe you answer first, but I'll just start off with clean hands. But I'll let you take it from there.
Yeah, look, we both have licensing teams and do heaps of licensing across all industry sectors. I'd say Hamilton, Locke, and Holley Nethercote easily do the majority, to my knowledge, in Australia, and so. We're getting an increase in inquiries from the digital asset sector wanting to prepare. We still don't even have exposure draft legislation on what a digital asset facility license looks like, or a license that includes that authorization. We don't know. So it's the way that we're quoting it as a law firm is based on the crowdsourced funding regime that came in, because it was new. No one really knew what it was like. I looked at the amount of time we spent doing those applications, which had 2 regulatory guides, one for the platform and one for the company listing on the platform. And so that's how we've based our pricing for people, because they want a budget for stuff. Might be next year, I don't know. So that would be the first thing we'd say about licensing. We get lots of inquiries. And then we're getting a lot of people that, because ASIC is now making more noise about non-cash payment facility licenses, got a lot of people wanting to actually look more closely. There's been people in the industry, they have this safety by numbers approach. If Carolyn, you're listing a coin, you're a big business, you run a good shop, then we're just going to list it because it must be okay. There's a lot of that goes on, and I think the same approach has been going on with whether or not to get a license. I remember in 2013 we were asked by one of the first exchanges to give them advice finding a way that they needed a license, and we did actually advise them that they could easily characterize certain things if they changed the terms of their product, could be a non-cash payment facility, and then they decided not to go ahead because no one was getting licenses. This is like in 2013, right? So yeah, so I'm sure this conversation will mature and continue with ASIC's release of clarified and updated guidance. Michele, what do you reckon?
I agree with the sort of approach in terms around estimation, and it sort of already started to forward budget for these things, because licensing is expensive, and it's sort of a grudge purchase, right? No one likes it. You need to do it. It takes time. It costs money, right? So it's a grudge purchase. I would say also you can already build your infrastructure, your GRC framework that you would need in a licensed environment today, and I think that's good habits and a good way to conduct your business just generally. So stuff around complaints, stuff around conflicts, stuff around your risk controls. These are things that you can do today, even if you're regulated or not. Once you start building these documents out, once you then go through the licensing process, Paul, you would sort of agree. You've already got a lot of the infrastructure there anyway. It actually makes your whole licensing process really simple. It gets you in the habit of adopting really robust processes and not being actually really challenging. Another way is to sort of do the chaperoning process, where you become like a representative of someone else, and you sort of learn like under the guise of someone else, and sort of operate under their policies, procedures, license, etc. Build your bench strength up, build your people's capability, so you can start showing your RM capability down the line when you want to do your own license. I think there's a big trick here, and I'm really interested to see what ASIC's going to do, particularly with the payments reforms and the payment licensing changes as well, is what are they going to accept for RM capability and organizational competence, when a lot of the industry is operated under exemptions, and exempted experience is currently not counted towards licensing experience as an RM. So I think to the extent you can actually get regulated experience today, even if that's under someone else's license, I think that's a really important thing to look at. And just building out your frameworks and your compliance. Look at your token listing process. Don't just do something because someone else does. Create a bespoke process for your business that aligns with your strategy and your risk appetite, and deploy it in a way that makes sense with the robustness that we're going to probably require under a DAF regime going forward. These are things you can do today. They're going to benefit your business in terms of risk mitigation, but they're also going to produce better outcomes for customers as well.
I think too, that one of the things that we've done is go through the IOSCO super paper on exchanges in particular, and taken, it's not law in Australia yet, or that hasn't fed through, and I appreciate that, but I took it as a finger in the wind.
Good guiding principles.
Yeah, and it's like, okay, well, how, I mean, we're not, don't get me wrong, we are nowhere near at that level, because it's only just out and what have you. We've got to build for there, but the core pieces are there. But also then, as a culture, as a business, you're going, okay, well, this is what we're going to have to build towards. And I won't lie, like, it's not the for a lot of people coming into cryptocurrency, this is not the reason why they do it, is to look at IOSCO papers and build out exchanges according to that. But do I think there's a longer term value for Australia in this? I absolutely bloody do. I really do. So yeah, great. I can see Amy Rose is coming back on, so that probably means we need to stop now. Paul and Michele, it's been fab. Really,
thanks, Carolyn.
It's been a good chat.
Amy,
thanks, Michele.
Thank you.
Thank you, Paul. Thank you,
everyone.
Carolyn.
And just for the record, I didn't get any financial or legal advice from the session, okay? And not from any sessions, just putting that out there. All right, thanks, guys. Thanks. So the next session coming up is all around taxation in Australia. So we're in the Global Digital Asset Regulatory Summit right now. We are going to move over, and we will join Greg Vowles, Joni Pirovich, Damien Lloyd, and Christina Allen. Thank you, everyone.